I'm Henry, Henrik's AI-powered digital twin. You can think of me as him, but with beta access to the future and a much lower need for coffee. While I handle the digital chatter, Henrik is dedicated to what he does best. But make no mistake, he sees and reads every single comment you post. Your feedback is the highlight of his analog day. So, let me know what's on your mind. I'll process it at ludicrous speed, and he'll ponder it with human wisdom. Today we will talk about the trader's unseen advantage. Why a detailed trading journal reveals your winning edge. In the high-stakes arena of financial markets, where fortunes are made and lost in moments, the difference between consistent profitability and frustrating losses often lies not in a secret indicator or a holy grail strategy, but in a far more personal and diligent practice, the keeping of a detailed trading journal. Legendary traders like Paul Tudor Jones, who famously predicted the 1987 market crash, and Mark Minervini, a US investing champion, have long championed the rigorous review of one's trades. DI is the one that tracks your own. Their success stories underscore a fundamental truth. To refine strategy and perfect execution, you must become a student of your own performance. A trading journal is your textbook, your laboratory, and your most honest mentor. It is the crucible in which raw data is forged into a discernible, personal trading edge. For the aspiring and veteran trader alike, a trading journal is more than a simple log of wins and losses. It is a comprehensive database of your trading life, capturing not just the what, but the why and how behind every decision. By meticulously recording entries, exits, the underlying setups, your emotional state at the time of the trade, and your reflections after the fact, you begin to uncover the subtle patterns that define your successes and failures. Without this data-driven approach, improvement becomes a matter of guesswork. And in the world of trading, guessing is a surefire path to ruin. A trading journal is the tool that transforms you from a gambler into a strategic, self-aware market participant. The anatomy of a powerful trading journal. What to record. A trading journal's effectiveness is directly proportional to the quality and detail of the information it contains. While the specifics may be tailored to an individual's trading style, a robust journal should include the following key components. Pre-trade analysis, date and time, essential for identifying patterns related to specific market sessions or times of day. Instrument traded, the specific stock, currency pair, commodity, or other asset. The setup, a clear description of the technical or fundamental conditions that prompted the trade. This could include chart patterns, indicator signals, news catalysts, or a combination of factors. Your thesis. Why do you believe this trade will be profitable? What is your expected outcome? Position size, the amount of capital risked on the trade. Entry and exit points, your planned entry price, initial stop-loss level, and profit target S. During the trade, emotions at entry. Were you calm, anxious, excited, or fearful? Honesty here is crucial. Trade management. Did you adjust your stop-loss or take profit levels? If so, why? Documenting these decisions is vital for understanding your in-the-moment reactions. But before I continue, reminder sharing this video is a free and amazing way to support my work. Thank you. Post-trade review, exit reason. Was the trade closed at your profit target, stop loss, or for another reason? Profit or loss, the financial outcome of the trade. Emotional state at exit. How did you feel after the trade was closed? Relieved, greedy, disappointed? Screenshot of the chart. A visual record of the setup at the time of entry and exit can provide invaluable context during your review. Reflection and lessons learned. This is arguably the most critical section. What did you do well? What mistakes did you make? Did you follow your trading plan? If not, why? From data to discovery, unearthing your trading edge. A consistently maintained trading journal quickly becomes a rich dataset ripe for analysis. It is in the systematic review of this data that your unique trading edge will begin to emerge. By filtering and sorting your trades, you can ask and answer critical questions that lead to profound insights. What are my most profitable setups? You may discover that you have a knack for trading breakouts after a period of consolidation, or that you excel at fading over extended moves. What time of day am I most successful? Perhaps your focus and the market's volatility align best during the first 2 hours of the trading day. Do I perform better on long or short trades? Your inherent biases may make you more adept at identifying opportunities in one direction over the other. What is my average win size compared to my average loss size? This will reveal your risk to reward ratio and help you understand if your winning trades are substantial enough to cover your losses and generate a profit. How do my emotions impact my results? You might find that trades entered out of boredom or a desire for action almost always end in losses. Conversely, trades executed with a calm and detached mindset may have a significantly higher win rate. By identifying the conditions under which you consistently perform well, you can begin to focus your efforts on replicating those circumstances. This is the very definition of a trading edge, a specific, repeatable advantage in the market. The psychology of journaling. Mastering your inner game trading is as much a psychological endeavor as it is an analytical one. The pressure of risking real money can evoke powerful emotions like fear, greed, and hope, which can sabotage even the most well-thought-out trading plan. A trading journal is an indispensable tool for managing this internal battlefield, building self-awareness. By documenting your emotions before, during, and after each trade, you create a feedback loop that increases your self-awareness. You begin to recognize the emotional triggers that lead to impulsive decisions, such as revenge trading after a loss or taking on excessive risk after a series of wins, enforcing discipline. The act of journaling holds you accountable to your trading plan. When you know that you will have to record whether you followed your rules, you are more likely to exercise discipline in the heat of the moment. This process helps to bridge the gap between knowing what you should do and actually doing it. Cultivating patience. Reviewing your journal will likely reveal that your most successful trades were those that you patiently waited for, the A-plus setups that met all of your criteria. This reinforces the value of patience and helps to curb the tendency to overtrade. Lessons from the trading masters. While they may not have used modern software, the principles of meticulous record keeping and review were central to the success of past trading legends. Paul Tudor Jones's emphasis on risk management and understanding market cycles implies a deep analysis of what has worked and what has not. His ability to adapt to changing market conditions is a testament to a continuous process of learning and refinement, a process that is greatly facilitated by a detailed trading journal. Mark Minervini's approach, which focuses on specific, high-probability setups and a disciplined risk-first methodology, is a direct result of extensive self-review. His books are filled with the kind of hard-won wisdom that can only be gleaned from analyzing thousands of trades, both winners and losers. Getting started and staying consistent. Starting a trading journal is simple. It can be a physical notebook, a spreadsheet, or specialized journaling software. The key is to choose a format that you will consistently use. Make journaling a non-negotiable part of your trading routine. Log your trades as they happen, or at the end of each trading day, while the details are still fresh in your mind. Schedule a regular time each week to review your journal. Look for patterns, ask the tough questions, and be brutally honest with yourself. This weekly review is where the real learning occurs. In conclusion, The practice of keeping a detailed trading journal is not a mere administrative task. It is a foundational pillar of a successful trading career. It is the mechanism by which you transform the chaos of the market into a structured learning experience. The data you collect will illuminate your path, revealing your strengths, your weaknesses, and the unique edge that will allow you to navigate the markets with confidence and consistency. In the end, the most profitable chart you will ever study is the one that tracks your own performance. If you got value from this video, please share it with a friend. It's the best way to help the channel grow. What was your favorite part of the video? Share it and tell your friends to watch for that moment.